Welcome to the B.F. Anderson Technical Report for February 26. We know it's been a very difficult week this week. We had the coronavirus scare. There are also maybe other things going on, such as political events. Who knows? The market is it's a discounting mechanism, and it's discounting the future. And it just doesn't like what it sees right now. So as we get right into the charts, you can see here that we now have a broken moving average. Now, to get our terminology straight, you have a break and then you have a violation. And I'm going to show you how we determine the violation. So right now, we have a break in the trend on the NASDAQ. Now, if we go to our weekly graph, this is where you get the violation. In other words, if this breaks below the 35-week moving average for 2 consecutive weeks, that is a violation. So far, this looks like a correction. This does not look like the beginning of any kind of bear market and so forth. But we are seeing, as we've mentioned for the last couple of weeks, things have been very hot. We're starting to cool down in here and eliminate some of this white space. Now, on the aggression index, which we call the aggression indicator, where we compare the NASDAQ to the consumer staple stocks, you can see we've also gotten a downturn there, and it has broken below the 10-week moving average. But so far, it continues to be on a buy signal as long as it stays above this lower moving average, and that lower moving average is turning up. So not too terrible. But then we get to the global Dow. We can see here that the MACD, as we get into the MACD, we're starting to see some deceleration of momentum. So, it rallied, never really broke out to new highs, now pulling back. Not a really good sign. Now, just one other note, on the 10-20 moving averages, we're still on a golden cross. Now, on the small caps, again, we're still on a death cross there. We did not get to a golden cross. The index, which is the small cap stocks, has broken down below both moving averages. However, we've also seen where the MACD is going negative, so we're losing momentum on the small caps. They tend to be the canary in the coal mine, and it's telling you to be very cautious here. This is the time for defensive matters. We have raised a lot of cash in this market this week. We will just sit tight until things become more clear. Now here's the S&P 500. Again, you can see that the MACD has somewhat peaked out and somewhat of a deceleration. However, it continues to stay above the moving average, and we are on a golden cross here. On the value line geometric, which is the average stock, this is a equally weighted index of 1,700 stocks, never made a new high, just like the small caps. MACD is basically giving a sell signal here, and we're on a death cross, so not a very positive picture. Now on the Chinese stocks, this is the PGJ. This is every Chinese stock that trades in the United States. You can see death cross in the moving averages, trying to give a golden cross, just not getting there. However, MACD looks okay. The Chinese stocks are actually holding up remarkably well. Now here is sentiment. We're starting to see some fear coming in. Now, this is the PutCall Ratio. Institutions will hedge their portfolios using options when they start buying a lot of puts because they're worried about the market going down. This line goes up, so that's what's going on there. Now, I also want to take a few minutes here and talk a little bit about what's going on with interest rates. This graph at the top is the yield on the 30-year Treasury bond, which is hitting an all-time new low. Interest rates are continuing to go down. Now, this is a second graph. This is the TLT. This is a long-term bond fund, and you can see it's breaking out, hitting new highs. The third graph is a bank ETF. This is a group of banks. When interest rates are going down, that is going to deteriorate the bank's profit margin. Therefore, you can see here we've got what we call a wedge pattern where we're breaking down below the lower wedge. Banks are important. We need to keep the economy strong and credit readily available. All right, let's talk about oil. This is the West Texas Intermediate Crude. Oil has been really taking it on the chin. Stocks like Exxon, Chevron, etc. are making 52-week lows. And you can see here that the price of oil dropped to $49.90 and has broken below $50 a barrel, which tends to be somewhat of a psychological level. This is an index here of exploration stocks. These are energy stocks. You can see that there's pretty much a correlation here with the price of oil and the stocks themselves. So you can see here breakdown, downtrend, breaking down again, and the oil stocks are breaking down as well. So if you're betting on oil prices, good luck. I don't think it's going to be going up anytime soon. Advanced micro devices. Let's get into the top 5. You can see here. Now, this is how we look at this graph. This is a 10-day moving average. The stock broke and closed below the 10-day. Well, you would have set your stop loss right here, and then you would have stopped out of the stock on that drop, which we'll have to see how it works out. But that is not a favorable pattern. This is AKSM Therapeutics. Again, we saw a lot of basing action here, but now it's rolling over to the downside. Domino's Pizza. This is kind of a new name to our list, just came on this week. You can see here, big gap up on earnings, building a base, really looks very good. Who would have thought? Pizza. Now here's Tesla. Tesla's kind of having a tough time here. We broke below and closed below the 10-day moving average, and so we would be setting a stop, probably somewhere in this range in here. But so far, the stock is holding around 780, 790. You stick with it for now, but I would hold off on any new buying. Zillow. Again, this is real estate, housing. Got a good bounce on earnings. Came down, is touching the 10-day, holding up fairly well. Keep an eye on Zillow. So what I'm saying here is this is not a bear market. We're still in a bull market, but we're getting a warning here, again, with the small caps and the value line geometric. So, keep your powder dry here. Don't be too aggressive. Anything that's in the portfolio that doesn't look right or is not acting right, I would get rid of it. Let me know if you have any questions. Thank you very much.